Over the past 10 years, it was a story of every company becoming a software company. And now I think it's a story of every software company becoming an AI company.
Welcome to Technovation. I'm your host, Peter High. My guest today is Mary D'Onofrio. Mary's a partner at the venture capital firm Bessemer, where she primarily focuses on cloud software investments. Mary's a co-author of Bessemer's Scaling to $100 Million report, the annual State of the Cloud reports, and the 10 Laws of the Cloud. And she's a key architect of the BVP NASDAQ Emerging Cloud Index, which serves as the benchmark for public cloud companies. She also developed Bessemer's cash conversion score and authors the annual Cloud 100 benchmarks reports. Mary was previously named to Forbes 30 Under 30 list. Mary, welcome to Technovation. It's great to speak with you today.
Thank you so much for having me. It's a pleasure to be here.
That's my pleasure. Well, I wonder, Mary, maybe begin with a little bit of context setting into Bessemer itself. Can you talk a bit about the firm and how it differentiates itself in the world of venture capital?
Certainly. Bessemer is a 100-year-old VC firm, the oldest in the country, and it actually has its roots all the way back to Carnegie Steel. Andrew Carnegie had a partner, Henry Phipps, and Henry Phipps used his money to start a family office, Bessemer Trust, and in the 80s, Bessemer Venture Partners spun out as an independent venture firm. Since then, we've grown and we're on our 12th fund now. And we're $20 billion under management and a global presence. We have offices in the United States, in the Bay and in New York, in London, in Tel Aviv, in Hong Kong, and in Bangalore. So we truly are a global firm with 25 investing partners. It's a really large partnership, but it allows us to cover a lot of geographies and then also a lot of sectors. We do everything from healthcare, companies like Hinge Health, for example, to rockets and space, companies like Rocket Lab, to software investing, which is where I focus, companies historically like Twilio or Procore or Toast. So some of the biggest names in software and in cloud software specifically.
And how did you develop your interest in cloud as an area of expertise?
So I joined Bessemer about going on 7 years ago now to start our growth investment practice. So doing Series B and beyond across different software categories. I spend a lot of time in infrastructure. I spend a lot of time in vertical software, and then I'll also do horizontal apps as well. But the reason that I did that is because in a prior life, I was an investment banker at Morgan Stanley. And I did private capital markets, so raising money for private technology companies, effectively the sell side of what I do now. And it was at a time when a lot of companies were staying private longer, using banks as access points to diversified pools of capital, sovereign wealth funds, pension funds, rather than kind of going down Sand Hill Road as the world is becoming smaller. And I got to work with the likes of Uber and Airbnb, but I really enjoyed the software companies, Forescout being one of them. It was part of what piqued my interest. And so since being at Bessemer, that's where I've spent a lot of my time. I was also originally hired by Byron Dieter, who is one of the most notable cloud investors at Bessemer and in the world. And so was very fortunate to apprentice with him for quite a few years before becoming a partner myself. So all of that added together to hone that area of interest and an investing area today.
I mentioned in the introduction, Mary, that you're an author of State of the Cloud reports. And I wonder if you could take a moment and talk about the state of cloud today. It's certainly pervasive across companies and has matured tremendously with still a lot of growth opportunities, both for companies that are leveraging the cloud as well as companies based in the cloud itself. Talk a bit about sort of where we are in the ongoing evolution of cloud.
Over the past 10 years, it was a story of every company becoming a software company. And now I think it's a story of every software company becoming an AI company. And, I think part of the reason we're here talking today is because of the Cloud 100, which we did in partnership with Forbes and we published last month. And, as you see the rise of AI on that list, it's reflected in the way that AI is being used across software and cloud companies today. I still think there are a lot of workloads that haven't been moved to the cloud, especially for regulated industries like healthcare or financial services. And that will continue to happen in kind of what we're calling historical cloud software companies. But I think increasingly that's being accelerated because a lot of these companies are wanting to use AI tools. They're wanting to automate a lot of their work. They're wanting to be more creative and use tools that can help accelerate their product innovation, their sales and marketing channels, all of it. And so when I think about where we are, I think this is an accelerant for cloud adoption, and they're kind of becoming synonymous.
Yeah, it's interesting as you point out. Really, these are topics that grow together. The increased adoption of artificial intelligence and the enthusiasm for generative artificial intelligence, in order to best take advantage of that, among the ingredients necessary is a cloud adoption, right? Is in order to get the most out of that. Talk a bit about you as you reference the parallel tracks that the two are on. Can you talk a bit about what excites you from one to the other? One of the things that has emerged, I know, for instance, is from an AI perspective and even a generative AI perspective, the thought process of having a multi-solution approach, not unlike from a cloud perspective, especially in the early days, but through to today, taking on a multi-cloud approach and thinking about diversifying across the different use cases and different lanes in which the relevant technologies are applicable. I wonder if you see additional similarities associated with them.
Well, if this is the direction you were going, I think in the same way that you might use various public clouds for various use cases, like we're seeing the same thing when it comes to various foundation models on the AI side. You can plug in Anthropic, or you can plug in OpenAI and use the different models that have different weights, and then you can fine tune them for your individual use cases. And at the largest enterprises, you can see different groups using different models and fine tuning them for their specific purposes. So I think if that was the comparison you're drawing, I think it's very apt. And I think that there has not yet been crowned, one individual foundation model to rule them all. I think largely like the public cloud landscape, there will probably be 3 to 4 winners, but also like the public cloud landscape, a lot of it's predicated on hardware, and to buy hardware, and the best hardware, requires a lot of capital and inherent distribution. So I think that's why you also see the foundation models partnering with the large public clouds for that distribution. So I think certainly what you're saying is correct, and what I'm seeing in a lot of our companies, even our portfolio companies, have the chance to leverage, this model versus that model. And I think it's also paralleled in the larger enterprises that, as with the public clouds, like don't want individual vendor lock-in.
Makes sense. And as you contemplate the Cloud 100 that you referenced, as you think about the companies that are rising to the top of that, what are some of the ingredients they have in common? What are some of the things you're starting to see or have continued to see as difference makers for those organizations that are most successful?
So I think it probably is a good place to start on kind of what the themes are that we're seeing in that list. And certainly over the past year, we've seen the rise of the AI subcategory. There are a bunch that we track: design, collaboration, productivity, sales and marketing, data infrastructure, vertical software. And the one that surged ahead this year was the AI category. The entire list itself was worth $820 billion, and the AI category alone was worth $176 billion, propelled the furthest by companies like OpenAI, Anthropic, Cohere, Mistral. So we're seeing a lot of the foundation models. And then we were also seeing a lot of vertical AI, companies like Abridge, for example. And so I think one of the themes is the largest TAM and the largest applicability across all enterprises. And as we were just speaking to, the foundation models have that opportunity. You can decide how you're going to adopt AI, what products, what end customers are going to be the most impacted, and you're going to have budget in order to accelerate their workflows. But you're probably going to do it, at least as a starting point, from the foundation models and from purchasing from them. And so I think that's allowed them to ramp revenue incredibly quickly. And then the vertical AI companies as well, I think, have very, very clear users, and there's just a very high willingness to pay, with very clear use cases being built for individual user sets. And so I think what you've seen is the revenue ramp for those companies has been quicker than ever. So across all of the AI companies, and part of the reason why it's so many of them are on the Cloud 100 this year, is that their time to becoming centaurs, as we call them, $100 million ARR businesses, is shorter than ever. It's only about 6 years. And across the list broadly, it's 8 years. So what you're seeing is revenue acceleration and ramp that's quicker than ever. And as a consequence, value accretion that's faster than ever. So I think that those are some of the things that they have in common, is large TAMs, very, very clear use cases, and end customers that are seeing tremendous value in the near term.
And obviously, as you point out, with the overall valuation of AI being such a large percentage of the total valuation of the category within the list of cloud companies, is there any concern you have that of this becoming frothy, like perhaps overvalued, given the pace, the rapid pace in which the valuations are scaling?
I think that's definitely true. There's no private valuation of a company that's quote unquote correct. You're either underpaying or overpaying, depending on what the company will become. And there are certainly, deals that you see and rounds that you see where they're fully priced, and the only way you can see, investors making money is if that individual company becomes a market leader and becomes a market standard. So I think there's definitely a lot of overvaluing, but in the context of a huge paradigm shift, and in the context of some company you see being a market leader in any category, whether it's next generation search, or it's personal assistants, or it's sales and marketing and SDR software, like there is going to be some company that ends up transforming these industries, because sales and marketers don't want to do a lot of their own lead gen, and there's probably a better search experience that's personalized and that gives you the right answer. And it would be really great if I had an AI assistant to schedule my meetings for me, and to tell me what's the optimized time for me to pick up my dry cleaning. Like there's something that's going to transform our lives, but it's not going to be every company. So I think that's part of the job, and that's part of the nuance, is like figuring out what the right risk adjusted return is for you as an investor, for funds as a whole. But it's a long-winded version of answering yes to your question. Is there are definitely some in that when there are 10 companies that are doing the same thing in, call it sales and marketing software, like 9 of them are probably overvalued. And one is tremendously undervalued, and that's the company that's going to make a lot of money, and the investors are going to be really happy.
And as a growth investor, as you point out, sort of Series B and beyond, you're clearly looking for those organizations where there's already product market fit, they're already sort of accelerating their growth and so on. What are some of the filters that you use to determine whether or not the company you're investing in is the one rather than the 9 that you just described, and one that will maintain leadership, at least as best as you can surmise?
Well, I'd say in the AI wave, given the adoption, and I actually think like with AI, there's more of a willingness to experiment and to try new tools than there has been in the past, especially with more staid software categories. So the difference between an A and a B and a B and a C is actually less than it has ever been, at least in my experience. But nonetheless, I tend to talk to customers a lot and see what they have to say. And there's very little that can be proxied for, what is your end customer experience like? What did they say about the product? If you said that you could automate these tasks, can you in fact automate them? Are their lives easier, harder? What are they? And so I think that helps me to distinguish and to differentiate company to company. But of course, there are also other things like financial metrics, which ends up being a lagging indicator, but nonetheless will show you the momentum and the acceleration of a company, and that it says something different if it's at 3 million of ARR versus 30 million of ARR, in terms of kind of widespread customer resonance. And of course, it's the team, more than anything, it's kind of having individual insights, and especially in the AI landscape, a lot of the distinctiveness of product comes down to data, comes down to industry insights and distribution. And so finding teams that are going to work with that level of urgency and have pathways of getting proprietary data with proprietary distribution and clear industry insights, I think are the ones that are going to win. So that's what I look for when I'm making those bets.
Very interesting. Thank you for sharing that. I wonder, you mentioned the sanctity of speaking with end customers. That certainly seems wise. And I wonder if I can, without, of course, going into the great details of the specifics of company by company, but as you contemplate the savviness of end customers, are there differences by industry or other factors that might determine who would be more apt to partner with venture-backed companies or be early adopters of innovative, relatively new technologies?
I don't know if I have like a super proprietary perspective on this. I do think that a lot of companies and enterprises are willing to try things, especially that allow them to do things like cost cutting, allow them to do things like automating their work and making their employees' lives better. And, whether that's like automating an OCR process or that's, as I said, like automating a call center flow, which helps their end customers. I think there are like very, very clear use cases for AI that are near term tangible. And I think the ones, speaking going back to your comments on generative AI, the ones that are text-based and repetitive and paper-based, those tend to be the ones that I think are going the fastest. And the large language models that internalize text incredibly well are really well suited to cater to. So I think that those are the ones that a lot of companies are focusing on first.
Excellent. I mentioned earlier you're also a co-author of the 10 Laws of Cloud, which I found really interesting. And I wondered if we could dive into maybe a law or two. One of which, Law 5, master the 5 C's of cloud finance. Can you talk a bit about the thought process around that, in addition to describing those 5 C's?
Yeah, so I think the 5 C's of cloud finance are basically high level metrics that we feel like every cloud company should track, they should understand, and they should use to guide their own businesses. So the first is committed annual recurring revenue. That's annual recurring revenue, so the annualized value of a contract you might sign, and it includes contracted upsell and it excludes foreseeable churn. So that's your North Star, how your business is doing on an aggregated basis. And it's slightly ahead of GAAP revenue because it is an annualization of your current contracts, but nonetheless can be used to guide your spend because that's what you're going to be earning in the future. The second is cash flow. Cash flow is obviously incredibly important for a cloud company. It also determines whether or not you need to finance yourself with venture capital or other financing sources. And the pathway of cloud companies is that there is upfront customer acquisition costs. You pay to acquire your customers via various channels. So there's a dip in your cash flow, but it increases given the recurring nature of the contract values and the relatively high retention rates of cloud businesses versus kind of other businesses like perpetual and on-prem businesses with perpetual licenses. We track cash flow also to measure efficiency. We want to constrain our spend, which cash flow captures by what we're able to acquire as CARR. The third thing is customer acquisition cost itself, and we track that because we're interested in strong unit economics. I spoke to it a little bit there, but you want to constrain what you're spending to acquire an individual customer by how much money they're going to give you over the course of their lifetime. So that brings you to the fourth thing, which is customer lifetime value itself. At Bessemer, we recommend that customer lifetime value to customer acquisition cost be 3x or higher, and ideally 5x or higher. Anything under that, and you're losing money on incremental customer acquisition. And so you guide your business by optimizing for it. Like, hey, if I'm going through this marketing or sales channel and it's costing too much, maybe I might pivot to this channel. And of course, sometimes that's just predicated on how much money your customers are willing to spend with you. So maybe you would offer a cheaper product to offer, or you'd increase ACV if you think that there's higher willingness to pay. And the last thing is churn. In this dynamic where you're spending a lot of money up front to acquire a customer, you need the customer to stick with you long enough to give you that payback for you to see that customer lifetime value realize. And so the enemy of all cloud businesses, of businesses in general, but certainly in cloud businesses, is churn and losing customers. We measure churn in two ways, on a logo basis, where you're losing the business of X customer, and on a dollar basis, which might not necessarily be the same. Like maybe you have one customer, but they pay you $1 million. You care a lot more about that customer sticking with you than if that one customer pays you $10,000. So across those 5 things, we have a good sense as an outsider of what a cloud business, the fundamentals look like, and the strength of the business model. And then as an executive, you can use those to guide your business best practices themselves.
Really interesting. Thank you for walking through those. The very next law, Law 6, is discover your secret KPIs. Can you describe that? Very, very interesting and provocative. Would love to understand more about what secret KPIs are.
Secret KPIs are kind of North Stars for a business that end up being leading indicators, but they might not be transferable to other companies. So DocuSign, for example, had the number of tracked or pardon me, signed envelopes as being a KPI that was a leading indicator of business strength. For example, other companies that might have like number of if it's a customer service company, maybe the number of resolutions that they help to resolve in a given week or month. And that is obviously not the same KPI that DocuSign would be using and vice versa. But nonetheless, it's a North Star metric. Oftentimes they're tied to end user productivity or telemetry of the product that can help to guide strength, resonance, and then stickiness over time.
Very interesting. You alluded earlier to some of the changing dynamics in companies while they are private. The typical exit for companies you invest in is either going public or being acquired by somebody else. And especially relative to decades past, companies are staying private much longer, as you alluded to. And I wonder how that changes the dynamics of an investor and the limited partners you have who you are counseling on when the returns they might receive will be realized. How do you think about that evolution of sort of the length of time necessary in order to get the true returns on the investments?
I'd say that if the businesses are building, in my experience, like LPs end up being happy because they know that you're going to deliver the returns that you've promised them and that you're all hoping for together. That said, like obviously the 10-year fund life is a limitation that most venture firms have. And you're seeing it in the data. Going back to the Cloud 100 list, there were only 2 graduates from the 2023 list, Klaviyo and Rubrik. And in the past, we would see, 5 or 10. We also saw a return to the list, Figma, that had announced its merger with Adobe, and then ended up returning to the list. But I think that the IPO window reopening and the exit environment blossoming is something that all investors and LPs are looking forward to. And it's only anecdotal, but it seems like there are some whispers of very, very strong companies looking to the public markets for 2025.
Very interesting. I wanted to also ask you, as I noted in the introduction, you're prolific in terms of contributing to reports that help educate many people on the evolution of a variety of different topics, cloud being at the center of many of them, given your expertise in that area. But I wonder, how do you stay current? How do you, in a fast-moving business environment where so much innovation is happening, what are the methods that you use, the resources or sources that you leverage to ensure that you're also keeping your finger on the pulse of the evolution of cloud and beyond?
It's impossible to read everything or consume everything, but I do my best. I talk to a lot of portfolio companies and execs to see what tools they're using, see what dynamics they're seeing, especially with the rapid changing and evolution of AI. I also do my best to stay current with listening to podcasts such as this, and reading a lot of newsletters that kind of keep me up to date on the news of the day. I really like the Fortune newsletters, Term Sheet, for example, and the Wall Street Journal. And so I do my best to consume as much as I can. And if there's anything I miss, it'll be covered the next day. I think it's perfect is the enemy of the good, and so I do my best to stay as informed as I can. But of course, it's impossible to consume all of the information of the world every day. But between the newsletters, the podcasts, and talking to folks that are smarter than I am, I get the spirit of it.
That makes sense. I appreciate that. I wonder, as you look to the future, we've talked about some of the outcomes, for instance, of artificial intelligence and Gen AI and the cloud more generally speaking, but anything we haven't touched on that particularly excites you as you look to the future, trends that are evolving, things you're remaining abreast of that you think might have outsized impact on the businesses at large?
Well, I'm excited in particular about the impact of AI on some of the investing areas that I focus on today. I do a lot of investing in developer platforms, companies like HashiCorp or Teleport or LaunchDarkly, and And AI is being used to accelerate the workflows of developers, whether it's copilots themselves or it's things like preventative debugging and maintenance. And I do a lot of vertical software investing, and so the intersection of AI with vertical software is a place that I'm spending a lot of time. So I think that those are some of the trends that are going to shape the way that we live and work and do our jobs over the next couple of years, and those are themes that I'm tracking actively.
Wonderful. Well, Mary D'Onofrio, thank you so much for taking time with me today, sharing a bit about your perspectives and the depth of expertise you have in a number of important topics for listeners and viewers of this podcast. I'm grateful for your time and for your insights.
Thank you so much for having me. It was such a pleasure.